So we ended up finishing the week very, very strong within the green, going 8 for 11 on Friday, trading 0-day options. In terms of how the stock market is setting up, we are setting up for a highly predictable, lucrative trading opportunity to be buying SPY call options as long as we are gapping up heading into tomorrow. I'm going to walk you through the new key levels of interest where I'm planning to trade both ways at heading into this week. I'm going to show you exactly where I'm interested in potentially going long in day trading call options, where I'm interested in potentially going short in day trading put options. I'm going to show you step by step how to trade the best setups at the best prices both ways, and I'm going to walk you through the best trade ideas, the most lucrative, predictable trading plans that I have for you. Let's get straight into the analysis. So first things first, I'm going to be going over the game plan for call options. In terms of the foundation, we're going to need a gap up for calls. If we are not gapping up, there is one oversold level that I'm planning to use the break and retest strategy as long as we get confirmation at. So in terms of the foundation that I'm seeing with call options, it starts with the weekly chart, and then there's also a daily chart foundation, and then I'm going to be going over the key levels of interest. So this is how I came up with the overall trade idea, and I'm going to break down the foundation step by step from weekly to daily chart. So what we're doing is we're going to be comparing this 4-week range to the past overall 5 weeks, right? So this is what I wanted to break down. You can see right here on the SPY, you have these 2 green weekly candlesticks uptrending slanted, right? And then you can see right here, we have these 2 green weekly candlesticks uptrending slanted, right? Nearly identical, very similar, weekly candles, very similar prices in terms of where the SPY is trading at, right? So in terms of the next 2 weeks, you can see right there, it has a red bearish, overall daily weekly candlestick, right? Red and bearish, and then we have a big red and bearish. So the reversal started to occur after 2 bearish weeks, and then when this red, overall bearish candlestick ended up forming right here. So as you can see, we have 3 overall bearish weeks, which is more than last time, but in terms of the candlestick, you can see right here, the weekly candle is at a more oversold level, which is even better, and it looks identical compared to this weekly candle. So if history were to repeat itself in a similar cycle with this overall weekly pattern that has basically been repeating itself for 4 weeks now, in terms of what I'm going to be looking for, we can have a small drop in terms of where we ended up closing. So below 576, we can have a small drop. And in terms of if that history repeats itself, it's going to be a phenomenal opportunity to dip buy at an oversold level, at a break and retest level, which I'm going to be going over. In terms of last time, it dropped about, a little bit over 3 points, then it started to bottom out. And another indication that I'm going to be looking for with this overall bullish week pattern, right, is going to be a gap up for a gap and go. So that is the weekly chart analysis in terms of the potential trend reversal that can be coming. So I'm going to be looking for oversold dip buying opportunities on calls. In terms of measuring the move, you can go at 3 points below the previous closing price, but I have a break and retest level for you. But now I want to quickly get into the daily chart pattern as well. So in terms of the daily chart, this is what I want you to understand. We have a very oversold gap that has recently filled at 570. You can see right here, when we started to bottom out in the high 568 range to 570, we had a massive move to the upside, and then it started to sell off. And if you go back throughout that weekly chart pattern that I showed you, in terms of how that overall week ended up closing, it lost a lot of gains throughout that overall week. If you compared the overall weekly chart, you're going to see right here, this was the week. It lost a lot of gains, but it had a strong move first to the upside. And if it dipped first, it was a great opportunity to be buying calls, right? So there could be a sell-off later into the week if we're having a strong move to the upside, but overall, the main focus into this week is going to be call options. So we're in the process of having a gap close reversal where the SPY is consistently reversing at this gap on the daily chart at 570, and you can see there's just massive upside potential along with that weekly chart pattern, right? So historically, if you go back, you're going to see there's so much strong support, and there was many gaps to fill below. At 568, there was a gap to fill below. At 570, there's a gap to fill below. The SPY is consistently trying to reverse at this gap now for basically 4 days in a row. It's been forming very strong support in between 573 to 567 for 4 days in a row now. And now it's attempting to form some higher support. Now, another bullish pattern that I wanted to point out here was the green, red, green pattern. So in terms of the SPY, we're in the process of having a gap close reversal. We have the green, red, green pattern on the daily chart, and this is very oversold, and this is looking very bullish, right? And there's also a gap that is waiting to fill above at 583. So in terms of the SPY, it's trying to reverse and it's trying to explode up to fill this gap heading into this week at 583.10. Now, in terms of the focus for call options, let's get into this, man. So as you can see right now, we ended up closing at 575.92 in terms of where we're at right now. We are currently trading at 573.70, right? So in terms of the overall market, you can see right here is attempting to have a small gap down. Now, in terms of the break and retest levels, this right here is the best level to buy call options. I would even auto buy call options in between this range. Now, the lower part of the range is the best level possible where you should be putting some size, consider some size at this overall level. This 568.70 to 569, that overall zone is going to be the best level to use the break and retest strategy on. And then in terms of slightly above that, if you're seeing support form at 570, that's going to be a phenomenal level as well. So that would be the best level in terms of call options to be buying heading into this week, right? That's the best zone where you can look to auto buy in that sense. I'm telling you, man, auto buy calls below 569, that's the best level possible. That would be a genuine gift to be buying call options at that overall level, right? So in terms of the other levels, you know, we need to maintain above this 570.20. 570.20 is overall make or break. If that reacts to support, then the next level we're going to be going to is going to be towards this 573. Next level above that is going to be 576. Next level above 576 is going to be the following resistance level right here at 580. Next level above 580 is going to be at 582 to 583. In terms of key levels of interest to go short and to buy put options, it would be towards the gap. There's a gap that's waiting to fill above at 583.10. If I'm seeing strong bearish, 30-minute candlestick confirmations in between 582 to 583.10 for a gap close reversal for a previous support to react as a resistance, breakdown, retest, I'd be willing to scalp some puts at that overall range. In terms of the market right now, for the micro, this is what you need to understand as well. So in terms of some support, you can see right here, you had some support right here. SPY cracked in the pre-market, and then also during normal trading hours, it tried to form lower highs, turn that previous support into resistance, started to sell off. And then you can see right here, you have some support right here at 570. Once the SPY tested 2 hours of resistance, started to sell off, right? So it's trying to turn that previous support into a resistance. It really needs to maintain above this like 570, but like I said, that best level for calls would be below 569 to just auto buy levels. But I'm telling you, this level right here is going to be very interesting to keep your eyes on. This 573 to overall 570, man. So, I mean, those are the main levels. I gave you the overall price ladder. I gave you the auto buy levels for calls. It's going to be a much more oversold. Now, if we do end up gapping up, so if we're opening up higher than the previous closing price, I'd be interested in buying call options towards break and retest levels. So if we're opening up towards 576, the break and retest levels would be literally at 576 and 577. So what I would say is, in terms of buying the breakout, wait for the SPY to break above 576 and hold around 576 to 577. If you're seeing bullish confirmations in between that range, you can buy calls. Before then, it's going to be a bit more difficult to find the exact bottom. You can keep your eyes on 573. That's make or break. 573 is make or break. Next level below that is 570. 569 is the best fucking level to be buying those overall call options. So what I'm telling you is it's going to be a little bit more difficult potentially to be trading in this middle zone, right? So the middle zone is going to be towards, I would say 573. 573 is the middle. 570 is a key support level. 569 is the best level to buy fucking calls. So 570 to 569, watch that zone for call options. 573 to 572 range, a bit difficult to be trading in. Is make or break support. If you've seen a bullish confirmations, you could try it. And then if it doesn't work out, you can auto buy calls below, 570, make it all back and more. And then the break and retest level is 576 to 577. So if you're wondering when SPY is going to go super bullish for that crazy breakout, it has to break above 576, turn 577 into support, keep on holding above 576. That's when it's going to have that crazy breakout and start to turn this previous support right here back into support, this resistance right here back into support, right? And it's going to start to fill the gap above 582, which is a potential level for put options. And then in terms of above 582, 585. In terms of above 585, we have 588 to 589. Later into the week, 589 is a crazy fucking level, man. 589 and 591 is going to be a put zone, man. If you go back throughout the 30-day chart, you're going to see, man, the 20-day chart here, you're going to see it's such a crazy fucking level. This 589, man. If you just go back throughout the past 30 days, you have to even go further back. Let me see, man. So I'll quickly go back to 10-day. Let's see. We got to go back to 30 days. I was looking at this earlier. Let me see. So this level right here, this is fucking crazy. This would be the best fucking level to just auto buy those puts, because I showed you that weekly candle where it can potentially be very bullish first and just buy the fucking dips. Like 573 could be the potential bottom in terms of measuring that move, where it went from 576 to 573, measure move minus 3 points. But this level right here, this 589 to 591, all of this support, that's likely going to react as a resistance, and then the SPY is going to sell off very fucking hard. That would be the best level possible for put options heading into this week. 589 to 590, right? So that's what I wanted to break down here for you. In terms of a break of trend and for the bears to really take control, I mean, the way how this looks on a 10-day, 30-minute chart, the way it looks like how this is setting up, we've been crunching slanted to the right side, and you can see right here, we had support right here, then we had lower highs right here, previous support reacts as a resistance, then we had the crash, and then this was the previous support. So take a look at this, man, because this is very important, right? In terms of the bears staying in control. There was support right here, and then the SPY crashed. And then we formed lower highs at the previous support. Now it's attempting to have a gap down. But this is what I want you to keep up note of. The new support was right here. This was the new support at 570. And then we crashed that new support. And then ever since we closed that gap, look at this. It's been forming support, breaking out, forming support. It is forming support at that previous support. So what I'm telling you is, for the bears to really gain control, they needed to turn that 570 to 569 into fucking resistance, and they failed. They are currently failing to turn that into resistance. So what I'm telling you is, basically, the bulls are going to be in complete fucking control. They're going to be in complete control heading into this week, as long as we are staying above 569. As long as we are holding above 569, you need to focus on buying call options using the break and retest strategy. Look at the levels I gave you. You can wait for a strong 2-point plus breakout. If it drops back down quickly, you see the confirmation, buy calls on a retest of the level. If you're seeing one of the levels react to support, right? That's what I'm telling you, man. There's a break of trend here. There's a break of pattern. This was the support. The support cracked. The new lower highs failed to form. You can see right here, this support cracked. The new lower highs formed, but we're forming higher support. The trend is attempting to shift. The trend is attempting to reversal. And you really just need to understand that as long as we are staying above 569, as long as 569 is support, the number one focus is going to be buying call options. The only two levels to consider put options as of now would be 582, which is the more lower level. Make sure there's a strong bearish 30-minute candlestick confirmation. But on that 589, 588, 589, 590, only levels for puts. Below that, you are focusing on fucking calls. So look, if you see the confirmations at 569, buy the calls. If you're seeing confirmations at 570, buy the calls. Next level above that is make or break. This is the middle. It's going to be a bit more difficult to trade, but if you're seeing the confirmations, 573. Next level above that, this is the breakout. This is the major resistance. Once we go above this level, that's when the trend shifts bullish like fucking crazy. This 576 to 577. Next level above that is going to be 582, puts for gap close reversal. Once 582 reacts support, market goes fucking crazy. We go to 589. 589 reacts bearish. Then we buy the fucking put options at 589. Also 582, if that reacts bearish, quick scalp on puts, right? So that's what you need to understand. Number one focus is on call options as long as we're above 569 to 570, and that's the best level for fucking calls. 573 is make or break, but based off the weekly pattern, it can be a very good level for calls if you're seeing the bullish reactions, right? So if we're at the higher levels, you can be a bit more patient. If we're trading towards the higher levels like 573, 576, be a bit more patient. Wait for some breakouts or wait for some floors to form on the 30-minute chart. If you are seeing those confirmations, then you can buy the call options, right? I want to make that very, very clear. Now, I'll quickly go over a break of trend in terms of what I'm seeing right now. You know, based off of how the market is setting up, I'm not seeing any signals of a sign of break of trend other than we are technically trying to open up with a gap down, which isn't going to be the most ideal, but I'll definitely be trading the market open tomorrow because in terms of market opens, I do like to trade when there's an overreaction, when we're having bigger gap ups and bigger gap downs and when we're towards the best levels. That's when I prefer to trade during the market open. If not, and the moves are small during the pre-market session, then I typically stay away from the market open. But in terms of a break of trend, for those of you wondering, because right now the break of trend is currently super fucking bullish. Another pattern that I wanted to point out on the daily chart, you know, overall, if you look at this daily candlestick right here, for the most part, SPY tends to react bullish, right? But in terms of how it reacted right here, it did overall react bearish, but then it started to recover. But I mean, if you look historically, worst case scenario could be a potential red day, but overall it's bullish. If you go back historically on that daily candlestick, overall it's bullish, but it could potentially be a red day. Like I said, there's been many times as well where it has been a red day, right? But in terms of a break or trend, for the bears to take control, it needs to go below 569. And if we go under 569, the next level we go to is going to be 565. 565 is the next level below that. And then in terms of the next level below 565, if you go back throughout the daily chart, the next level below 565 is going to be right here. It's going to be towards this 561, which is an auto buy level to buy calls. There's a gap to fill below at 561.50, below 562, auto buy calls. That's the game plan. That's all the levels I have for you. That's the overall ladder. Just remember, as long as we're above 569, we're bullish. As long as if we go below 569, then we start to flip bearish and we start to drop back down towards previous day lows on Friday. And we start to drop back down towards Friday's lows and we start to drop back down towards this gap. If that cracks under 565, then we go back towards the gap, 561.30. That's where we under 562. That's where we auto buy calls, right? That's the overall game plan. That's what you need to understand. For those of you who are serious about trading alongside with us, it's the first link down below within the description. What we do is we trade far out of the money zero-date options contracts, and you gain access to a real-time zero-date options trade alert system. You gain access to our community, our secured private organization. You gain access to the profit section where you can post your profits alongside members, man. We had many members on Friday absolutely crush it, man. I love to see it, man. Look at the fucking results. 58% return. We had a member in terms of account, 9% return. I'm telling you, man, we have so many members who are consistently making $500 to $1,000 a day. Nick, if you guys remember, last week, he was up over $30,000, man. In terms of if you go back, you watch the previous videos, he's up over $30,000. Look at this, man. What a fucking month. He's up over 43,000. Look at this. 43,000 on the overall past 30 days, man. Look at that. Past 30 days of fucking trading, $43,000 trading options alongside us, man. Look at the fucking results, man. $2,000, man. So that's what I'm saying, man. If you have a $50,000 account with trading options, consistently make around like, you know, $1,000, $1,500, $2,000. That's a good overall range to be aiming for. But yeah, man, we have many members absolutely crushing it, 73% return. So big shout out to the members of Team Roar. And like I said, man, in terms of the trades, we went 8 for 11. Everything is alerted in real time. Everything is broken down in real time. These were all the trades that we ended up making. Like I said, these contracts already expired, and I'm making this on Sunday, so I'm not going to be able to break them down, you know, like I usually do in terms of that. but all the trades are alerted 100% in real time, and this is a real-time zero-day option trade alert system. So we're known for buying zero-day options, very, very cheap, very, very low risk, far the money. We do not use stop losses. We put in our entire position size as our max risk per trade. So we have the entire day for the contracts to go green. If they go green, we set a profit stop when we're up 15%, and then we get stopped out for profits. If we're red, we just hold the trades. We have the entire day for the contracts to go green, and we trade the trend, and the contracts don't even have to go in the money for them to go green, right? So with that being said, man, if we time the trade right, we can make multiple 100% profit returns, even if the contracts don't go in the money. And we do go far out, very cheap, very low risk, but we go close enough to make sure that they can still go in the money in terms of measuring the move and the overall trend and price action. So we keep the focus on trading the trend. When you trade the trend, you can hold the trades. You don't have to worry about the theta decay. Like I said, we're selecting the right strike prices that are cheap, but not far enough to where they're not going to go in the money, as long as we're on the right side of the direction of the overall measured move of the trend, right? So just things to keep note of, just things to be aware of. And our entire position size is our max risk per trade. The most we can lose is what we put into the options. What we put into the options is our max risk per trade, our R multiple, right? So a lot of traders, they'll have a stop loss, and when they get stopped out, they lose their R multiple. With us, we don't use a stop loss. What we put into the option contracts is our R multiple. So if the contracts expire worthless and go to zero, then the most we lose is what we put in, which is our max risk per trade, except there's no stop loss. And we have the entire day for the contracts to go green, where we set the profit stop. The profit stop ensures that we don't go green to red when we're up 15%. We add to winners to increase the winning. We move the profit stop up higher. So that way, in terms of moving the profit stop up higher, it protects the bulk of our gains. If the market has a big move against us, we're going to still keep the bulk of our gains because we're moving the profit stop up higher. One of the ways in terms of increasing winning, we increase our wins by simply adding to winners. When we're up a little bit, 10, 20%, we tend to go up a lot. 100%, multiple 100% profit returns. Every single week, there's a 1,000% win inside of Team Roar. So with that being said, when we're up 10, 20%, we add to wins to increase the winning. And the way we protect our new risk by, increasing our position size is by quickly setting that profit stop. And then one small move in our favor protects the overall new average cost. We leave runners. You don't have to put in your entire position size into the profit stop. You can leave runners, sell the runners deep in the money, right? And then in terms of when we're down on a trade, we rarely add to losers. If we're down 50% on a trade, 70% of the time, that trade tends to come back to life and go in the money. It tends to come back to life and go in the money 70% of the time. Even if we're down 90% on a trade, 70% of the time, it tends to come back to life, and it tends to go in the green for us to set the profit stops. We have the highest win rate in the game doing this. The beauty of trading zero-day far money options is it gives you unlimited options where you don't have to risk a lot, and you can make a lot of money doing this. Because like I said as well, in terms of when you're taking smaller position sizes, the way to make more money is to trade more and to add to more winners. Last week, we had over 30 fucking trades on the week. You could trade a cash account. If you have $1,000 in the cash account and the contract prices are average at 50 cents a contract, you can literally make 20 fucking trades in a single fucking day with that cash account, right? 20-day trades with fucking $50 a trade on a $1,000 cash account. Make sure you're using a cash account as well. In terms of some basic rules to follow, like I said, entire position size is max risk per trade. If you are green enough, which is one big win or two small wins in a row, if you choose to keep on trading, the most you risk is 25 to 50% of your overall profits. If you give back those profits to the market, you have to force yourself to stop trading, because in terms of surviving in this market, green to red is not an option, and it's rarely ever worth it. No matter what setup you're seeing later on throughout the day, it's best to just call it instead of risking going green to red. That's something I never recommend, because it can send you on an overall psychological, emotional type of roller coaster. It's just not healthy in terms of trading. Another thing to be aware of is far out of the money options gives you unlimited fucking options. It gives you the most options to be trading within the market. It gives you a very strong foundation. You do not need a high win rate. The win rate does not matter. If you have a 200% win to break even on the day, you can have two losses. You can have two losses, one 200% win, a 33% win rate, right? You understand? The win rate does not matter. You need big percentage gains, and that's what we focus on. We focus on the biggest percentage gains. within the market. You can be very successful with a low win rate. We have the highest win rate in the game in terms of 0-to-8 options, but you can literally be profitable with a win rate as low as like 30%. It's possible, man. Especially when you're hitting trades every single month that go up 1,000%. If you make 1,000% win, that means you can have 9 100% losses in a row and you could still be profitable. So it gives you the strongest foundation to be successful with a low win rate. It's very, very cheap, very, very low risk, and no stop losses. And you can get started with a cash account. So like I said, man, we've optimized for a system that works. Our format works for many, many traders. Team Roar is massive. There's many multimillionaires inside of Team Roar. And you gain access to a real-time 0-to-8 options trade alert system of unlimited fucking winning every single day. In terms of the trades, it varies. Some days you get a couple trades, two to four trades. And then there's other days where you can get like 6 to fucking 12 days, to 6 to fucking 12 trades in a single fucking day. It varies. And then in terms of Power Hour, we trade SPX. Before Power Hour, we'll trade SPY. But during Power Hour, we focus on SPX. SPX is cheap and low risk, and it's under 100 a contract from 3:30 to 4 p.m. normally, and it has the biggest percentage gains. The gains are going to be a lot bigger than SPY, and the contracts are going to be extremely fucking cheap. Every single day during the Power Hour trading session, we tend to trade SPX, and the gains are fucking insane. Before that, we're focused on trading SPY, and I explained to you some background to the overall system. So if you would like to join us, it's going to be the first link down below within the description. You can gain access to a real-time 0-to-8 options trade alert system. This is not just buy and sell alerts. You can gain access to a community and network of multimillionaires, traders in here have more than a decade of experience. You also gain access to the profit trading section. If you want to start today and trade alongside us, it's the first link down below within the description. The stock market is on absolute fire. The moves have been fucking massive. This is the best time to get started trading 0-to-8 options. It's the first link down below in the description if you'd like to join us. With that being said, I'm heading back to my secured private organization.